Welcome to the pod. Welcome to the live stream. Be the boss of your money. You ever have a day hmm, when it's kind of boring, but you're just trying to make something out of nothing, like you're just trying to force something out of a day to just squeeze some energy. And that's what today was like in the stock market. We continue with the dog days of August. Not a whole hell of a lot going on. It's a slow day when all you could do is focus on just one or two stocks. It's just really not much else to focus on. Investors are right now, I think it's just a very tired feel. Investors are tired of talking about the Fed's next move. We kind of figured that out already. We have an idea of where that's going to go. Investors just had earnings season to digest. That's over. We had the big labor numbers. We don't have a Fed meeting until middle next month. There is just not a lot going on. That's why it's called the dog days of summer. There's just, as far as markets go, we're entering what would be considered a dead zone, a quiet zone. Last 2 weeks of August, first week of September. So I'm still doing the show. I'll probably be out, the last week of August. I'll be here, but I'm going to be skipping the show unless something really crazy happens. But let's take a look at what the deal is today, and we will catch you guys right up. Okay. All right. I'm just have a couple of screens I'm working with right now, but here is how we'll take a look at this. I'll pop myself up in the corner. All right, here I am. All right. Let me get rid of the social media icons. I can get rid of those. All right, there we go. That's better. Okay. The real big story of the day was tech stocks came roaring back. NASDAQ was up nicely today, up over 1%. The other averages were barely up. By the way, you can't invest directly into an index, but you could invest in a security that tracks or mimics an index. NVIDIA up 7%. That's a pretty big move, but still down from 480. So figure 40, that's like a $48 stock down to a $43 stock. If you bought it at 20, it's okay. But these stocks have backed off quite a bit in the last 2 weeks. Today, they recovered a lot of their losses from the last 2 weeks. This is the nature of technology stocks. We keep talking about this. When you play with these stocks, you really have to be prepared for volatility. There's something going on with them. It's a good thing. Numbers have been basically really good, and forecasts have been good. NVIDIA came out with a great earnings report recently. They raised guidance beyond anyone's most optimistic expectations. There's more demand for their chips that help power artificial intelligence applications than they can make right now. And they have about 90% of the market share for chips that do that. So there's no one even close to them. So that's why that stock is such bullish sentiment. It was going down, it's recovered. Amazon was up 1%. The rest of the group was up a little over 1%, except for Microsoft and Apple. They were up a little bit less than 1%, but up close to 1%. So Netflix, Google, these are the big stocks that we cover. What else do we need to take a look at? All right, the Dow is up 26, S&P up 25, but the real deal is NASDAQ up 1%. Russell continuing to be a little weak. Other than that, we have the big news tomorrow. Let me punch out of this here. The big news tomorrow is retail sales. Tomorrow morning, we get overall retail sales, and we get figures, quarterly earnings from Home Depot. Home Depot has been a disappointment every quarter for the last few quarters. We need to see what they have to say about the housing market. The housing market continues to be dead money, although prices are highly valued of houses. Home Depot needs transactions to sell more stuff. It doesn't matter how high the houses are going right now. If people aren't moving, they're not putting new carpet, new appliances, new paint. They're not buying new tools. You don't have regular guys like me going out there and buying new tools if we're not moving into a new house, or we're just going to use our old tools, I guess. But that's what's going on. So retail sales, we need some color on what back to school is going to look like and back to work. We'll have to see what that looks like. Right now, it does appear that the consumer is not back to spending on products yet. We are spending as a society like wild on European travel and going out to eat, but that is at the expense of good sellers. We'll see how that continues. We'll see if the consumer is perking up. Malls are still dead money. Uh, I'm not particularly hopeful for retail in general. I still think I still think we're going more and more into internet. I know that seems obvious. I've been saying this for 20 years, but it's not going to stop. We are still over retailed still to this point, and I still don't think enough closures, mall bankruptcies, mall operator bankruptcies have happened enough to become a healthy environment for retail. So it'll happen. Listen, it happened in the auto stocks. Automobile companies used to just make as much product as possible. Profits be damned. Airlines used to fill as many seats as possible. Profits be damned. And they corrected themselves to the point where those are pretty good, profitable businesses. I'd like to see the stocks do better, but that's besides the point. The same thing is going to happen with retailers. Eventually, every sector gets too big. They get whittled down, and then they come back. Fewer, bigger, but stronger players. That's going to happen again, no doubt. What else can we talk about? So, it's like we're trying to make a show out of something here, but right now the sentiment is that we haven't felt the full effects of the Fed's interest rate hikes, about 11 hikes so far. We're just starting to feel them now. But with employment strong, it's hard to say recession. The soft landing is the base case for everybody. You and I have been talking about this. I've been saying soft landing is my base case for months, for the year. And that means that instead of the economy going into a recession, the economy slows down enough to tamp down inflation without a recession. But depending on your station in life, on your career and your business, a slowing economy could feel just as bad as a recession anyway. Recessions are good because they get rid of excess energy, they get rid of excess valuations, and they make investors more disciplined, which means there's no longer an excess amount of money flowing around. I don't think there's an excess amount of cash flowing around right now. I think money supply has been shrunk adequately. Fed's raised rates. The Fed is letting bonds roll off its balance sheet, quantitative tightening. What that means is the Fed purchased like $9 trillion of bonds to get the economy moving from like the Great Recession till about a year and a half ago. And now those bonds are maturing, and instead of rolling those bonds over into new bonds, the Federal Reserve lets those bonds mature. And as they mature, it shrinks the balance sheet, and they're selling some bonds into the open market as well. So that's what's going on with that. But what do you count more? Slowing economy and low interest rates? Or do you count more, that's bullish for the market? Or do you count earnings going down? This is a bit of a battle, but I don't think either side has the win yet. I think we may have already seen the earnings trough, and earnings could actually start going up now. Let's talk real quick about goal setting, because this show is not meant to be another, here's a hot stock for you to buy right now, here's another artificial intelligence stock to buy. Tell you two quick things, actually. I get asked all the time about artificial intelligence stocks. In the beginning of a new revolution, like the internet, you were buying companies that gave you the ability to get on the internet, semiconductor stocks and software. It's the same thing with artificial intelligence. Artificial intelligence is the internet on steroids. Artificial intelligence right now is not so artificial, and it's not so intelligent. What it is decision trees. A decision tree that is very massive, that works incredibly fast, but nevertheless, everything is pre-programmed. If this happens, then that happens. If you go here, we're going to go there. If you go there, we're going to go here. It's kind of like a decision tree that when you call a business and they say, for sales, press 1, for parts, press 2, for an appointment or service, press 3. That's a decision tree in a very simplified way. But right now, it's all about a decision tree that has been pre-programmed to guide you from place to place to place. but it does so in an extraordinarily rapid way with an extraordinarily large amount of volume, a lot of information, a lot of data. That doesn't make it intelligent. I don't think it makes it artificial. So we think the moniker has been used a little bit too much. Having said that, the companies that are allowing this super duper decision tree are the companies that you would think of. It's Apple, it's Microsoft, it's Nvidia, a couple of others we could throw in there. But the point is, eventually we will have had enough of those. And eventually the real winners of the artificial intelligence arms race are going to be your ordinary, everyday companies that have already gone onto the internet. Procter and Gamble, Nike, Starbucks. These are all basically internet companies. Yes, they have retail exposure, physical presence, but they're all basically internet companies as well. So did the internet stocks work of the year 2000? No. What the whole point of artificial intelligence is, it's to help larger companies that are already utilizing the internet to help them use it even more. So the real beneficiary of artificial intelligence will be your typical stock in the S&P 500. Some will utilize it better than others. Some will get to utilize it faster than others. But if you want the big winners, the long-term winners in artificial intelligence, I don't think you have to overthink it and get so fancy. I think you could just buy the same quality blue chip stocks that you're already buying now, because eventually those will be the companies that become artificial intelligence companies, just like those are the companies that are also internet companies. Let's talk about goal setting. The point of this presentation, the point of why I do this, again, is not to give you the stock of the day. You know, I would rather teach you how to fish so you can eat for life than give you a fish so you can eat for today. This is all educational. But when you make a goal, it could be a financial goal, it could be any kind of goal, but let's say a financial goal, you have to picture the goal. You have to work backwards and say, what are the steps you need to do before that goal? And you work backwards up to today, and then you go back to the goal and make sure you have your steps covered. I'm all about working backwards. And that might sound silly to you because you always say we want to go forward, we have to move forward. But sometimes you have to go backward first to move forward. And I see a lot of people coming up with personal finance goals and financial goals failing miserable because they just want to jump on the bandwagon. They're full of piss and vinegar, and they're so enthusiastic. They get started and then they fall backward and then they give up because they don't know what to do. The reason you don't know what to do is because you didn't outline the next step. But you can't outline the next step if you don't know what it is, which is why you have to work backward. So if you have a goal, for example, to buy an investment property, you need to start watching YouTube videos, reading up, asking experts about properties, about how to buy a property. You work backwards. What do I have to do now to fix up my credit score, for example? That's a question to ask yourself. What do I have to do now to start saving up the money for the down payment or to put more equity into the property? If the goal is truly a priority for you, you will become obsessed with it. I'm a big believer in obsession. Some people call it manifestation. I just call it obsessing. Not to say you can't give yourself a break and think of other things, but when you're in your zone, you're going to focus on that goal, and it's going to help you to say no to all the other money-destroying things in your life because your goal becomes more important to you than all of the other things. It's about prioritizing. That's what a budget is, right? It's all about prioritizing, not starving yourself of joy. It's about prioritizing on the thing that will give you the most joy. That's how we set goals here. As a financial advisor, I'm also your accountability coach. And if you're looking to work with your new financial advisor, it's this guy right here. So reach out, clientfirststrategy.com. I'm going to get going, make this a quick show. Hopefully tomorrow I'll have some sparks in the market to talk about. But if it's boring, that's okay. At the end of the day, I think personal finance should be boring. Have a great day. Talk to you tomorrow.